Hello everyone, my name is Divya Walia and welcoming you to my channel. This is going to be my first video after a lot of procrastination, to be very honest. The intent of this channel is that I want to share with you guys whatever new things I learn, whatever I know of basis the experience that I have. And before I begin there, I would want to introduce myself. My name is Divya Walia. Professionally, I carry 9 years of experience in the domain of finance, working across areas of business finance primarily and FP&A with multiple organizations post completion of my MBA and then my CFA. Um, Hoping the information is totally not unnecessary. So the objective of this channel here is that I want to it is twofolds. I would be sharing things with you and also inviting you guys to share your thoughts, share your learnings with me, so that in the process I also enhance my knowledge base. And second is that I believe that if you have learned about something, verbalizing it is a way from where you can build in clarity of thought or have structured thought process. So without further ado, I would jump on to today's topic. Today, what do I want to talk about is financial statements. As many of you might be aware of it, and if in case you are not, no problem. I'll be sharing a brief on it. So the financial statement is, in accounting terms, if I have to share, the companies present the picture of their business. If they're operating into any business, the picture of their business through three financial statements. First is known as the balance sheet. Balance sheet, if I have to summarize, is like the net worth of an organization. By net worth, if I have to talk about me as an individual, so I'm, for the lifetime that I've lived, I have saved money, I have created some assets. So those are all my assets, whatever I have. Against that, I might have some liabilities which are due in near term or longer term and are ascertained in nature. So the delta of my assets and liabilities would be what my net worth is, what I can define that I currently own. So what the company owns at a specific point in time, taking into account any dues that they have to pay for running the business, is known as balance sheet, which is always as of date. And business is a going concern, is a continuing entity. So every change in their network as the year or years progresses gets added to their balance sheet or deducted from their balance sheet if their net worth is going down. So that's what balance sheet is. The second financial statement is P&L, which is known as profit and loss account. So when an entity is doing business, so the primary objective is to make some profits out of it. Or there might be cases that in the initial few years, the state profit and loss statement shows that they are making loss, but there is a longer term vision that the company would turn profitable, which we see as a scenario in today's date of startups, wherein the metrics are very different. They do not take into account only the loss, but they take into account the growth potential. There might be investments getting made in some years which would reap benefits in future years. So that is how it works. But coming back to P&L, profit and loss account gives us a picture of an organization over a course of some period, which is generally known as accounting period. So the accounting periods might be the end of quarters or a full year. So generally, when we look at a company's performance, we look at from a horizon of 1 year's perspective. That in 1 year, what is the earnings that the company made, and to get that earning, what is the expenditures that the company has made. So that is what profit and loss statements presents. So the third statement would be cash flow statement. So when I talk about cash flow statement, cash is, we all understand, just how you understand it in very basic term, what is the cash amount that the company has generated over the accounting period that we are talking about. So if you are aware of the concept, that there might be cases that I am showing that I've earned some revenue, but there are receivables against that. So when I as an if I am operating in a business with my customers, or for that matter I have vendors also. So one thing is you procure something from your vendors, you sell something to your customers. So when we talk about revenue, it is the dealing with the customer. When you talk about expenses, it is the dealing with your vendors. One part of it, of course there are other expenses and other streams of revenues also. So there might be cases that I have sold my product or service to the customer, and in accounting terms, as in when I have delivered my goods or services to the customer, I am eligible to recognize it as my revenue. But there might be so that I have not received payment against that. So there are arrangements, bound by the agreements, wherein there is terminologies of payment terms. So I might be selling to my customer, who by the virtue of agreement would be paying to me in the next 60 days or 90 days, as is there in the agreement. So I can recognize the revenue, but the cash inflow has not happened as of now. Similarly, it applies to expenses also. So I have procured something, but I might pay it at a later date. So the cash might be reflecting in my books today, but the outflow is going to happen at a later date. So this is how the cash flow works. The cash flow can come from the core operations business. Cash flow can come from the investment activity. So we as individuals also, right, we are working. So my core business is the salary, the work that I'm doing, the business I'm drawing, the income that I'm drawing from it. The other incomes can be if I make a source of some passive income, right? Then I might do some investing activities. I might be investing into shares, I might be investing into bank, I might be investing into real estate. So whatever income I'm generating from there counts as my income from investment. And then there are financing activities, cash flow for financing. So taking into account all of that gives me the real picture as to how much of the cash I'm holding at the end of a period. So these are how the financial statements work like. Now, what do I want to talk about over here? So this is how it works. All of us know. Now coming back to P&L, if I have to talk about, so when I talk about P&L, the first line item that I speak about is revenue. So in terms of revenue, there might be multiple streams. So basically it is divided into revenue from operations, and the second would be other income. So in terms of revenue from operations, it can be if I am a company who sells services, or if I am a company who sells goods, it would be from the sale of product. And as a product selling company also, I might have some service revenue. I sell the product to the customer, but I also offer some after sale services beyond warranties also. So that would come as my sale of product, sale of service, that would both get accounted in my revenue from operations. And if I am a service company, I might be delivering multiple services, so there can be bifurcation of the revenue among those services. And then there is other income. In terms of other income, which I spoke about, passive incomes, second stream of incomes if you have, or investment incomes that you have. So other incomes can be, I have bank security deposits and I'm gaining income from there, so that would count as other income. So that's how my revenue stream works. Now coming to the second part of it, I have to see what is the kind of expenditures that I'm making. So first expenditure is the operating expenditure. So if I talk about a manufacturing setup wherein I have got some experience in manufacturing, the cost of operations primarily starts from the cost of raw material. So if I have to make a product, the first thing that I need to invest into is source the raw material which will get converted into that particular product, which as finished good. So cost of raw material. Once I have the raw material, I will invest in the cost of conversion of that raw material to a finished good. So which can entail multiple costs, conversion cost, or in terms of the labor that I'm spending over there, in terms of the 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 assembly lines that I have over there. I am investing in those assets, but only the depreciation part of it is something that I'll consider over there. There would be utilities cost, there would be rental cost. I am paying a rent, so into that there are some variable costs, some fixed costs. So talking about that, now why was I trying to introduce the concept of cost? Was that in an organization which is so big in nature, and I need to report my financial statements, how do you think the companies actually roll up their costs? It cannot be so that on one fine day somebody comes and tells me, yeah, in this year I've spent this much. How do they track their expenses? So for tracking the expenses, when an organization is such large scale in their operations, there are multiple functions, multiple entities defined within an organization. So there are sub organizations within a larger organization. What do I mean by that? So maybe within an organization you have, if I talk about a manufacturing thing, there is a manufacturing setup, there is a research and development, there is corporate setup. Into corporates, although there are multiple functions, which would be HR, IT, finance, corporates, and then at the plant level, once the products are converted into finished goods, they would have to get stored into a warehouse. From warehouse they'll have to get stored into further spokes. So if you are aware of the concept of hub and spoke, hub is where the major inventory is kept, and spoke is wherein you get closer to the customers. You maintain localized inventories basis what is the trend in a particular area, and then you deliver it to the customer. So till the time it is not delivered to the customer, it is every cost that you are incurring comes under the umbrella of organization. So how do all of this work together to roll up the cost? So one concept that the companies use is cost center. So all the functions that I spoke about, starting from plants, starting within plants also there might be multiple entities that might be there. So over here let me talk on the more surface level, plants, in terms of corporates, your research department, finance department, sales department. So everybody is uniquely given a cost center. So cost center is an identifier given to all the functions, and then the cost that is incurred by a particular department can be mapped like that. Whenever, so say I get a utilities bill, which is like the electricity bill, water bill that I get. I know this bill pertains to the area that is allocated for my corporate, that is allocated for my plant. So I will book that in the book, that bill under that particular cost center. So in my system it is fed. So there are systems. So primarily companies uses SAP. So in SAP, when you will pull out a ledger, it would show you that cost mapped under that particular cost center. Now there is a cost center that has been defined. When I talk about cost center is plant, where the manufacturing is happening, is one cost center. Let me talk about sales, warehouse, from where the sales is happening, is another cost center, and corporate, wherein all the admin expenses are getting booked, is third cost center. The three cost centers. But then in the cost center, I have defined the cost center. That doesn't mean I'm able to capture all the expenses. So under cost center, there would be defined expenses. There are different nature of expenses. So for running a building, I will have to pay some rent. For running a building, I will have to put some assets into place, which will hit me as depreciation. Which is again an accounting phenomena, that we do not take the cost at entirely in one go, but take it on an year on basis. So for usage of assets, there would be a depreciation cost. Then for operating in that building, I would be using utilities. There would be workforce in terms of employees that are allocated to that particular cost centers that I spoke about. So these are all nature of expenses, and the list goes on. So these nature of expenses, these would be overlapping expenses. I got an invoice that got booked into the plant, right? But what that invoice pertains to, that might be an employee expense, that might be a utility expense, that might be a rental expense. So in that way, what is done is exhaustively all the nature of expenses that are there are given a GL code. GL is journal ledger code. So those are again the next set of unique identifiers. So if I have to say what is the cost of rent that a particular manufacturing facility is giving, what I need to dig into the system, my ERP systems that are there in place, which stores all the database for an organization, I will go to the cost center, which is for that manufacturing facilities, then dig into the GL account, which is pertaining to utilities, and then see what is the actual expense booked under that and what is the expense that I've made in a year. So it would be booked on a month basis, and then the dump would give you a year's cost, and that's how you know the cost has been, this is the amount of cost that have incurred. Similarly, hundreds of cost centers with hundreds of GLs all cumulatively give us that what is the cost that I'm incurring. And this is what I spoke about in terms of cost, right? The similar thing can apply to profit also. So we can have multiple profit centers. The profit centers would be generally in case wherein the company is earning income via multiple streams. So it might have profit coming from manufacturing, profit coming from trading, profit coming from investing. So those can be the profit centers. So I in today's video wanted to introduce you guys to the concept of cost center, GL codes, and how the data in entirety is maintained by any organization. And when you see a financial statement has got prepared by a corporate, it's not a one-day job. Every day thousands of bills are getting booked, which is leading or rolling up into the cost that you see at the end of the year. So yeah, today's video was about this, and I hope I was able to communicate something fruitful to you. I would be coming back with new concepts in my following videos. Till then, bye bye, take care. Yeah.